How's everybody doing? Welcome to the Strategy Room on this Saturday night, July 12th, 2025. I am really excited about being back in here tonight. It's been quite a few weeks, it seems, since I've been here on a Saturday night at 8 o'clock, but great to be back in the normal time slot. So I've got tons and tons and tons of stuff for everybody tonight. So we've got Fed news, we've got tariff stuff all over the place. We're going to talk a little bit about Elon Musk and some of his trials and tribulations right now. I've got a ton, an incredible amount of banking news for everybody tonight. And as usual, we'll be going through our economic indicators, episodes of the week. We'll be talking about just all the other stuff. I'll have my story of the week and quote of the week as we get to the end of the program tonight. But let's kick off here as we always do. Just checking in real quick on the debt clock. As you guys can see in the upper left-hand corner, we're still currently cruising at $37 trillion in national debt. Our annual budget deficit still hanging out at negative $2 trillion. The Doge clock is now up to $553 billion in savings. That is approximately $4,928 per taxpayer. And our debt to GDP is still hanging out at 123%. So obviously need to improve on a lot of those numbers, no doubt. But let's roll into, before we get into some of our main stories here, I figured I'd go through a couple things here real quick. So very interesting. This week has been dubbed Crypto Week as we are going in. And so what does that mean? Well, the House of Representatives has dubbed July 14th through 18th Crypto Week. Members are expected to vote on the Genius Act, which would enable private companies to issue stable coins. A successful House vote would send the bill to the desk of President Donald Trump, who has expressed support for the proposal on social media. If everybody recalls, the Genius Act has already been approved by the Senate, so it's basically going through the House process right now. The House is also expected to consider the Digital Asset Market Clarity Act, which would establish a framework for cryptocurrency regulation. So that could be very interesting. So cryptocurrencies and particularly stable coins are expected to take center stage in Washington, D.C. next week during the House of Representatives' self-proclaimed Crypto Week. U.S. representatives are expected to vote on the Genius Act, a bill that would enable private companies to issue stable coins, a type of cryptocurrency that had its value tied directly to the state-issued currency, often the U.S. dollar. The bill would require companies issuing stable coins to back them one-to-one with liquid cash. Corporate interest in stable coins appear to be on the rise. Walmart and Amazon are reportedly considering launching their own stable coins, which shoppers could use as payment options. This, experts say, could significantly change the payments landscape since their widespread use might or would allow the retail titans to reduce the billions of dollars of credit transactions fees that they are currently paying to Visa and MasterCard. So the Genius Act was passed 68-30 by the Senate last month. So approval from the House would send it to President Donald Trump's desk in a Truth Social post. Trump said the bill would make America the undisputed leader in digital assets. Trump has a stake in a company called World Liberty Financial, a company that launched its own stablecoin USD1. The House may also consider the Digital Asset Market Clarity Act, which would establish a framework for cryptocurrency regulation involving the Securities and Exchange Commission and the Commodity Futures Trading Commission. The Clarity Act's backers include crypto exchange operator Coinbase Global, which has run a six-figure ad campaign calling for its passage. The CBDC Anti-Surveillance State Act, which would prevent the Federal Reserve from issuing a central bank digital currency, is also expected to be discussed. Bitcoin, the leading cryptocurrency, has been on a tear lately, rising from below 80,000 in April to above 110,000 this week. We'll get to that a little bit later, but that's the article there. So it's just very interesting. So we're basically, this week is going to be apparently Crypto Week. So we shall see how this goes next week. But I'm fully expecting that the Genius Act will be passed, and this will go to the president's desk. It will be signed. It will be. I will be very interested to see this other act with this regulation around cryptocurrency. That could be very interesting to see this more. What are some of the finer details of that act and what they're proposing? So we'll see what comes up with that. But there's no doubt the Genius Act is going to be a game changer. What will it do or not do to banks? I think that remains to be seen. It's going to be very interesting. I don't think that there is any doubt that banks are going to begin to play some kind of role in the holding of digital assets, but we'll see how that all plays out. But let's see what are some of the other things. So, couple interesting articles here that I thought these were very interesting. So both of these articles relate to American states. So these are America's cheapest states in 2025, winning the battle against inflation. So inflation may have fallen, but the cost of living is still a major concern for people across the country and the companies that look to employ them. CNBC considers cost of living among 10 categories of competitiveness in the annual America's Top States for Business rankings. In addition to the cost for basic goods and services, the CNBC study considered housing and insurance costs. So let's go down. So what were some of the best states, or what are some of the states that were considered the least expensive? So Michigan, on the cusp here, which is very interesting here. Michigan would not have been one of my first ones. Iowa, yeah, that I would think Iowa would be up there. Very good. Delaware, again, not another one. Delaware would not be on my list as cheapest states to live in. Wyoming, again, yeah, that would seem to make sense. Ohio, yes, I think Ohio's got pretty good standard of living there. Alabama, I think, has an excellent standard of living in Alabama. North Dakota, another one. Again, yeah, not right next to Minnesota there. Not too probably surprising there. Missouri, another one down by Alabama. Missouri, another good cost of living down there. Kansas also made the list. And then I think Indiana might be the last one there, but yeah, Indiana looks like I've never been, but it looks like a beautiful city. And let's see here. 2025 is the least expensive state was West Virginia. Not a shock there. West Virginia's economy is certainly not stellar, has been in the doldrums for quite some time. Housing there has been very depressed because of their overall economy. So that is not shocking to me that the number one, basically least expensive state in the U.S. right now is West Virginia. So coming in there. So, and then this is kind of interesting. So then this is America's top states for business. So CNBC's annual study once again puts all 50 states to the test, measuring them on 135 different metrics, the most ever in 10 key categories of competitiveness. So, but what were the top five here? We can see North Carolina comes in at number one. I want to say North Carolina has been number one or number two for a while now. If I want to say for probably going on the last, probably 6 or 7 years. And this is not the only survey that I've seen that has North Carolina rated as number one. I've seen multiple. I've seen probably 2, 3, 4 different surveys on, the best states for business. And, North Carolina has always been at the top, 1, 2, or 3 in pretty much every survey I have seen, particularly in the last 5 or 6 years. So North Carolina, very business friendly. Coming in at number 2 is Texas. Coming in at number 3 is Florida. Coming in at number 4 is Virginia, and then number 5 is coming in at Ohio. So and then it gets. I'm not going to get into all the scoring and stuff here, but I just wanted to give everybody. And then I figured I'd get the rest of the top 10. So, like I said, North Carolina, Texas, Florida, Virginia, Ohio is the top 5. Number 6 coming in at Michigan. Number 7 at Georgia. Number 8, Tennessee. Number 9, Indiana. Number 10, Minnesota. Yeah, I would not have thought Minnesota. Minnesota would not have been on my list in the top 10 most favorable states for business. Yeah, it's just kind of interesting. But then some of the other ones like Colorado at 11, Arizona at 12, Illinois at 13, Washington at 14. But no, let's look at the bottom here, though. I don't think there'll be any shocks on the bottom here. So we got Alaska and Hawaii on the bottom here. Obviously, very different economies in Alaska and Hawaii. A lot of tourism. Alaska's obviously got more energy production there, whereas Hawaii is where Hawaii is. So I don't think very surprising there. Montana coming in at the bottom, which is a little. And then you got Rhode Island, Louisiana. I was kind of surprised with Mississippi, New Mexico, Maine, Nevada, Arkansas. No, I mean Nevada. I think is pretty shocking considering how much of an emphasis they've put on. I mean, Nevada is one of the main hubs for forming companies now in the U.S. They've really tried to make a push on challenging Delaware in recent years for that status. So Utah has also made a big push for that as well. But so again, kind of interesting where some of these states are. West Virginia is the cheapest state to live in, but it's also one of the worst states for doing business in. So again, it's interesting. And then you've got, New Jersey, Delaware, Connecticut, New York, Massachusetts, basically all in like the kind of like the middle of the pack, so to speak. So I actually would have had New Jersey, New York, California, Illinois, Connecticut. I would have had all those at the bottom of the list. I would have thought that they would be basically the worst states to do business in because of taxes, regulation, just a whole litany of issues. But again, I just thought this was pretty interesting. Thought I would share it with everybody. So again, North Carolina coming in as the number one state to do business in. So again, interesting. Our big acquisition of the week. So CoreWeave to acquire Core Scientific in a $9 billion all-stock deal. So artificial intelligence cloud infrastructure provider CoreWeave said Monday it plans to buy Core Scientific, a data center infrastructure operator. It is an all-stock deal valued at approximately $9 billion. If the companies complete their proposed acquisition, CoreWeave wouldn't have to pay rent to Core Scientific on several data center sites. So maybe that's their rationale for wanting to buy them. But again, very, very interesting acquisition here. Obviously, caught a lot of headlines on Monday with this announcement. So we'll see where that takes them in the future. Okay, now I've got a couple articles here on Elon Musk. I wanted to share this with everyone just because there was obviously Elon's been in the news the last couple weeks, but obviously for the not best of reasons. So this was an article that was just in the Wall Street Journal this week. And this basically says, Elon Musk is running out of road in China as Tesla falls behind the local competitors it helped to create. The billionaire's rupture with Trump is limiting his value to Beijing. So Tesla's China market share is shrinking as local EV automakers gain popularity with features tailored to Chinese tastes. Musk's strained relationship with both Trump and Beijing limits his geopolitical value and Tesla's prospects in China. China sees Tesla as vital for its green economy, but they prioritize supporting domestic companies in EV and the tech sector. So as Elon Musk confronts deeper business and political challenges in the U.S., he also faces trouble in his other most important market, which is China. So for a while, Tesla was the hottest car on Chinese roads, and Musk was the toast of Beijing. Government officials showered the company with incentives, part of a concerted strategy to turbocharge the Chinese EV industry by injecting Tesla know-how into the country and spurring competition. Tesla's sales, as a result, took off, but the risk was always that Tesla would start falling behind the rivals it helped to create. Now that is exactly what's happening. So Tesla's market share has shriveled as other Chinese automakers become more popular. Meanwhile, Musk's reputation as a partner for Beijing and Washington took a beating as his relationship with Donald Trump soared. Chinese consumers say Tesla's increasing feel tired and out of touch with local tastes. Top China designed EVs nowadays come with features that aren't normally found in Teslas, such as multiple big screens to watch films and play games, refrigerators to keep drinks cold, and in-car cameras for selfies. That's very interesting. BYD, which makes both EVs and batteries, and battery giant Contemporary Amperex technology or CATL, recently said they each had developed new technologies that allowed users to charge cars in just 5 minutes. That's interesting. Um, so anyway, so basically, so Elon is running into a lot of trouble here in China. And as a side note, at the very tippy top here, I know most people probably can't see this, but it says here, Elon Musk's SpaceX has agreed to invest $2 billion in AI startup XAI in a bid to catch up in the AI race. Now, that may sound okay on the surface, but I would ask everyone out there, SpaceX gets almost all of its revenue from U.S. government contracts. So how can it just take that money and just decide to automatically? So XAI, just so everybody knows, that's a private company that Elon owns. It's like his AI company. He tried to get XAI to buy X, Twitter. But that was kind of put on the back burner for the moment. I think he's still trying to work through some regulatory issues with that. But now he's just taken $2 billion from SpaceX and giving it to XAI. Normally I would say that's probably not a big deal, but given his kind of political relationship right now, I don't think that's a good look at the moment. That that could come back to bite him later on, as some people may start to ask the obvious question. Well, wait a minute, those are U.S. government contracts that you got there, and U.S. government money, taxpayer money that's going into SpaceX. Shouldn't that money all be going toward SpaceX operations and not toward Elon's other private companies and private business ventures? It's just would seem like a common sense question there. So I'm not sure about all that. Like, that I would be willing to say that might come back to bite him later, because that might lead some people to start questioning, well, what is he doing? Well, maybe there should be an audit of SpaceX, because maybe there might be other things going on here. I'm not saying that should happen. I'm just saying, hey, be careful what you wish for. Then we had this. Elon Musk lashes out at Tesla bull Dan Ives over board proposals. He tells Dan to basically just shut up in a post. So Tesla CEO Elon Musk told analyst Dan Ives to shut up in a post on X after Ives offered 3 recommendations to the company's board. Ives suggested a new pay package for Musk, guardrails for the amount of time Musk spends at Tesla, and oversight on political endeavors. Tesla shares slid Monday after Musk said he was creating a new political party called the America Party. This guy Dan Ives, from everything that I saw, or at least the things that I read and looked at, it seems like this guy is just a true lover of Tesla. It doesn't seem like there was anything political in this. He's not politically motivated. It just seems like this dude is a huge, he's like a Tesla fanboy, and he just wants Tesla to do really well. And I guess he's big on it, loves it. And he just has a lot of concerns with just, what Elon has been doing. And he basically just wants, he wants the board of Tesla to basically add some new board members that would basically then put guardrails around Elon and try to just, reel him in, basically. Now, that I think is going to be, near impossible. I mean, you could change the board members all you want. You could put different people on there. You're not, Elon's going to do what Elon's going to do. You're not going to rail him. You're not going to reel him in, or put guardrails around him. Like, that's wishful thinking. And look, but I also say this, hey, look, man, let the guy do what he wants, man. The guy, for the most part, has done some incredible things, and I think will continue to do some good things. So, again, I think I say, for the most part, leave the guy alone. However, there is a huge but there. But he's going to reap what he sows. If he wants to kind of, go off and do all this stuff, there's going to be a price to pay for that. There's going to be blowback on some of those things. And, he's got to live with the consequences of that. And this, is not good. Okay, and the hits just keep on coming here. So Linda Yaccarino steps down as CEO of Elon Musk's X. So Linda is stepping down as CEO. She announced in a post, and this was on Wednesday. Musk hired Linda as CEO of X in May of 2023, months after he purchased the social blogging site Twitter for $44 billion. Linda did not give a reason for her departure. Linda, and then basically Linda's departure comes one day after Musk's artificial intelligence chatbot Grok repeatedly made anti-Semitic comments and referenced Hitler in response to posts about the Texas flooding. Grok is built by Musk's company XAI, which merged with X in March in an all-stock transaction. So I get, so you know what? I stand corrected. I guess he did get that merger through. So I thought that merger was kind of put on the back burner, but I guess he did get it through. So XAI, which merged with X in March in an all-stock transaction that values the AI company at $80 billion and the social media company at $33 billion. She didn't give a reason for her departure last week. But I wanted to get to something else here. Yeah, it just talks about some of this, but Musk has basically been on a tear, and this is the point I want to make here. So Musk has been on a tear, and he has fired a number of people. He's fired a number of people at Tesla. He's now canned a bunch of people at X. He's just like, I just don't know what's going on there, and so he's firing. He seems to be firing all these people around him. He's telling analysts and fanboys to shut up online when they ask him, when they try to propose to, do something to reel him in. China's not looking like, China looking like that market's starting to go south on him. And in the middle of all of this, he releases this Grunk, the fourth version of Grunk. And Grunk kind of spouts off and has all these says all these crazy things, and then we're just getting in trouble for that. And so again, just a lot going on here with Mr. Musk right now. And and again, he's doing all this at a time when he seems to be trying to transform Tesla as overall as a company, and he definitely wants to shift more to a AI robotics, robot, manufacturer type company. That really seems to be more where he wants to take the company into the future. Not that he wants to stop selling cars or that he wants to, can Tesla. I think he is trying to diversify the revenue stream, though. He's trying to create these other sources of revenue, which will hopefully eventually become the dominant sources of revenue for Tesla, as opposed, whereas vehicle sales might just become, 50%, 40%, 50% of the company's sales, whereas the sale of robots and the use of AI, various AI products and other things will bring in other revenue streams for him and become his dominant revenue stream for Tesla. So, and that is I talked about that last week. Like, that is a very tricky transition for any CEO, any company to make. It's just a lot of companies have tried to do those kind of pivots over the years, and it just has not worked out that well. So again, I thought, like I said, I thought I'd just throw that out there and talk about it. Well, I'm going to keep an eye on this, and we'll continue to see, how this plays out and see what goes on here. But things aren't going great at the moment for Mr. Musk. And I'm not sure what the answer is there. I mean, again, we'll have to just keep an eye on it and see what happens there. So, all right. NVIDIA had a record-breaking week. NVIDIA became the first company on Wednesday. The artificial intelligence powerhouse became the first company to amass a $4 trillion market share during trading. And then Jim Cramer added, the fact is neither Microsoft nor Apple can claim that they're currently creating a new industrial revolution like NVIDIA can. He said, in fairness, they did create the last industrial revolution, the rise of the personal computer, although that was a long time ago. Yeah, I'm not a fan of Mr. Kramer, and I would say that anything that Jim wants to glom onto, I would probably run the other way. um, but yeah, look, hey, look, Nvidia is hot right now. They're doing incredible. But I would just warn people that things change. I remember when you go back and you look at the history of Silicon Valley, a lot of companies have had kind of their moments in the sun for 4, 5, 6 years, and then kind of fell off from there. A lot of companies, and again, remember something, Microsoft and Apple today are completely different companies than what they were when they originally started back in the 1980s. I mean, they are just totally different companies today. I mean, both of those companies did a masterful job of reinventing themselves. And I would say, look, Nvidia's, they're doing great right now because they're making fantastic chips and graphics cards, and they're putting those out there. And unfortunately, a lot of people in either the crypto world or gaming or what have you. I mean, everybody needs these NVIDIA graphics cards. But things change over time. Companies. I mean, look at Intel. Look at Intel right now. I mean, Intel used to be one of the best chip manufacturers in the world. They had just an absolute domination of the consumer, personal computer market. Not so much anymore, and, so it's like I said, again, I don't take anything away from NVIDIA. There is their moment. They're having their moment in the sun, but I just caution people that, sometimes things don't last forever. So just something to think, just something to ponder there. Okay. Now, let's get into some Fed news here. So, as I have talked about over the last few weeks, a couple of the Fed governors coming out here, basically taking shots, basically at Jeremy Powell, saying that hey, we should be cutting interest rates, and July might be the great time to start doing that. So we have this basically debate going on within the Fed where, Fed officials could be split on whether to cut rates in July. So at least 2 Fed officials spoke out in favor of lowering borrowing costs as soon as July, while several others said the Fed should hold interest rates steady for now. So lower borrowing costs could boost the economy, but may set back the Fed's efforts to reduce inflation to a 2% annual rate. Financial markets are betting the patient faction, led by Fed Chairman Jeremy Powell, will prevail, at least for now, assigning a 22% chance of a Fed rate cut in July. President Donald Trump has repeatedly demanded the central bank cut the Fed funds rate, igniting a debate over whether the Fed, an independent body, should answer to the president. So, yes, so this is very interesting right now at the moment. I will tell you, we do have a couple of people that have spoken out publicly. However, there's a huge however here. When I always find it funny, the Fed governors have a tendency to be a little bit more open and honest in some of their speeches and the interviews and stuff that they give. But when it comes time to get into that, the FOMC meeting and get into the boardroom, very rarely do they have dissenting views and do they cast dissenting votes. And I would say that is the real test here. I would be really curious at the July meeting here in a couple of weeks. Will we have some dissenting votes? That's what I would really key in on. That's what I would really look out for. What will tell you if there truly is dissent in the Fed is if these governors start putting their vote where their mouth is and basically start voting and with a dissenting vote, basically saying that they do not concur with Jeremy Powell, that basically they do not think that the Fed should just be sitting there doing nothing, and that they should be reducing interest rates to try to help the economy and help the government with refinancing some of the debt, or at least the cost of refinancing that debt. Now, I will tell you, there were rumors yesterday that Jeremy Powell was going to resign. It was all over social media yesterday. There were, Jeremy Powell could be resigning because Bill Pulte over at the head of the FHFA has been basically riding Jeremy Powell nonstop for the last couple of weeks, has been basically going after him. And as we're going to see here in a second, So Trump budget chief Russ Vought ramps up criticism of Powell and vows investigation into Fed renovations. So obviously there have been a lot of questions starting to swirl around Jeremy Powell and the $2.5 billion he wants to spend on all these renovations and upgrades to the Fed's headquarters. And I even say, I mean, it's such a ridiculous, eye-popping number, $2.5 billion for renovations. So let's see here. So it says Office of Management and Budget Director Russ Vought vowed Friday to press an investigation into renovations at the Federal Reserve Building. This is about the largesse and the fact that he has systematically mismanaged the Fed, Vought said on CNBC. The accusations represent another front in Trump's ongoing campaign against Powell. So Office of the Management and Budget Director Russ Vought vowed Friday to press an investigation into renovations at the Federal Reserve Building, which he called a palace where costs are running amok, in a potential escalation of President Donald Trump's feud with Fed Chair Jeremy Powell. Vought told CNBC that an investigation is warranted into whether Powell has been misleading about the $2.5 billion project. You know, when you go to the nation's mall, you see the construction of this palace, upwards of $2.5 billion, massive cost overrun, and we want to make sure we have facts as to the largesse and the extent to which it's overrun, Vought said during a Squawk Box interview. I think it just points to the fundamental mismanagement of the Fed under the chairman. In a letter issued Thursday, Vought charged that Powell had grossly mismanaged the Fed and misled Congress about the price and scope of renovation at the central bank's headquarters in Washington, D.C. Vought said the Fed is over budget on the project and misled a congressional panel in June when he said some of the loftier aspects of the renovation, such as a VIP dining area and rooftop terrace gardens, are not included, though they appear in specifications for the redesign. The accusations represent another front in Trump's ongoing campaign against Powell. Trump has charged that the central bank leader is playing politics and not lowering interest rates, and has called on Powell to resign. The problem with Chairman Powell is he has been late at every turn. Vought said it's time to lower rates. You have a problem there. Again, this is about the largesse and the fact that he has systematically mismanaged the Fed, and that is evident by what we're seeing with regard to this monstrosity, this Palace of Versailles on the National Mall. I don't agree. I don't disagree with these comments. I mean, how do you justify this? How do you literally walk into Congress with a straight face with the amount of debt that the U.S. government has right now? I go back to, you keep showing this until I'm blue in the face. $37 trillion in national debt, $2 trillion annual deficit, and this guy wants to build a $2.5 billion palace. He wants to turn the Federal Reserve Building into this $2.5 billion palace with all these, outside terraces and gardens and VIP dining rooms and all this other crap. Really? I mean, like the Fed, the people at the Fed aren't already disconnected enough from the everyday person that's out there. Now they need this. I mean, I just think this is absurd. I would really like to know, who approved this? Who approved it? Who gave the okay for this? Who said, oh yeah, we're just going to give the Fed $2.5 billion to just go hog wild? This again just smacks you in the face. It's ridiculous. And given a time when the Federal Reserve has lost $235 billion in the last 2 years, yes, the Federal Reserve has lost $235 billion. The fact that they have unrealized losses of over $1 trillion on their balance sheet, the fact that they won't reduce interest rates. It is getting really hard for Jeremy Powell to sit there and basically try to make a case for himself that he hasn't dramatically mismanaged the Fed and its operations at this point. I mean, this is he's basically going down in a blaze of glory at this point. So I think it would behoove him at this point to resign and just step aside and go, go write your memoirs, man. Go home, go write your memoirs and turn it over to somebody else. And then this is how pathetic of a response that you get from the Federal Reserve on this. So Federal Reserve quietly responds to Trump administration attacks over renovations. So a new frequently asked questions page on the Federal Reserve's website defends the central bank's recent renovation project and responds to many Trump administration criticisms of it. So, I mean, are you for real with this? Like, this is the best they got. Jeremy Powell can't come out and do a quick press conference. He can't come out for 30 minutes and just talk about this and answer some questions. He's got to, they literally have to put something on a frequently asked questions page. This is like, it's just like a bad joke. I mean, it's pathetic. It really is. I mean, that's what we got. So anyway, turning to the next pick, okay, we're gonna talk about his we're talking about who's coming next here at the Fed now. So now this article was we're going to look at two articles here real quick. So this article was from CNBC, and this is called Trump's Next Fed Chair Pick Already Comes with a Credibility Problem. So the next Fed chair faces an additional burden. Credibility issues now that President Donald Trump has stepped up efforts to exert a heavy hand on monetary policy. Trump reportedly is considering naming a shadow chair until the current occupant, Jeremy Powell, leaves office next year in an attempt to pressure the Fed into cutting rates. The real loser here is not Jay Powell, but his successor. TS Lombard economist Dario Perkins wrote, we don't even know who that person is, and already there are strong doubts about their integrity and what sort of deal they have made to secure the position. Now, I don't know who he's talking about here. He obviously has somebody. There's obviously somebody in particular that he has in mind that he's already going out of his way to lambaste this individual, even though we have no idea who this person is at this point, even though he appears to think he knows who this person is. Obviously not a pick of the establishment, that's for sure. And we're going to see that in just a second when we go to this next article here. But I think this is ridiculous. Like the successor to Jeremy Powell does not have any credibility issue. There's no credibility issue. We don't even know who this person is going to be yet. I think it's ridiculous that they would come out, that CNBC would come out and put out this ridiculous article here, much less this economist, Dario Perkins, coming out here and already lambasting somebody, saying that, oh, the next person's got this major credibility issue. And, how did they secure the position and how they get in there? Like, I mean, dude, really? Like, don't you think you're kind of jumping the gun there just a little bit? But anyways, but let's go on to this. So here was a very interesting article here in the Wall Street Journal. They came out here a couple of days ago. So two Kevins battle to be the next Fed chair in Trump's apprentice-style contest. Well, first of all, again, I think this is a little ridiculous saying that there's some kind of an apprentice-style contest. Kevin Hassett emerges as contender to succeed Jeremy Powell, posing a possible threat to Kevin Warsh. So Kevin Hassett, a close economic advisor to President Trump, is a serious contender for Federal Reserve chair. Kevin Warsh, a former Fed governor, is also vying for the position, but he faces concerns from Trump's allies. Trump is demanding rate cuts from the next Fed chair, and his team is blaming the Fed for high rates. So two Republicans named Kevin are vying to be the next chairman of the Federal Reserve. One is rising to the top of the list of potential candidates, while the other is facing skepticism from President Trump's allies. Kevin Hassett, one of Trump's closest economic advisors, is emerging as a serious contender to be the next Fed chair, according to people familiar with the matter. Hassett's rise threatens the other Kevin, former Fed Governor Kevin Warsh, an early favorite for the job who has angled for the position ever since Trump passed over him for it 8 years ago. Some people close to the president worry that Warsh, who isn't in Trump's inner circle, won't be a champion of lower rates. What is unfolding is unquestionably is quintessential Trump. Two ambitious men competing for his approval in a high-stakes contest that echoes the boardroom drama he once promoted on The Apprentice. Okay, I think this is a little ridiculous here. Hassett met with Trump about the Fed job at least twice in June, according to people familiar with the matter. The discussions marked a shift for Hassett, who previously had told allies he wasn't interested, but now he says he would take the job if offered. Warsh has discussed traveling to Washington this month to meet with Treasury Secretary Scott Bessent about the Fed position, according to people familiar with the matter. Hassett and Warsh didn't respond to requests for comment. President Trump has been clear about the need for the Federal Reserve's monetary policy to complement the administration's pro-growth agenda. So Here's my take on this. Now, Hassett may seem like he has a little bit of an inside track here. Okay. However, I I think that there is a high probability here that you could see like a dark horse candidate come out, someone who seemingly comes out of nowhere to basically get this job as the head of the Federal Reserve. I really do think that people might be surprised here. I'm not really sure that either of these gentlemen are really going to get or really have a shot here. This, Kevin Warsh, I would say he's out. He's like the Jeremy Powell. Not even Jeremy. Yeah, I mean Jeremy Powell, but he is the Ben Bernanke, Janet Yellen, Jeremy Powell, protege. He doesn't have a prayer. He's out. Forget him. He's out. He's gone. All he's going to do is get in there and carry on the nonsense that Powell and Janet Yellen have been doing for the last 10 years, and that's a non-starter from the word go. So he's out. Forget it. Like I said, I wouldn't sit there and get ready to crown Kevin Hassett and say like, oh yeah, he's the surefire guy to be in there, because I'm not sold on that either. Like I said, I do think that there is a chance that you could have a dark horse here. You could have somebody that just kind of comes out of left field and slips in there, and basically everyone's kind of surprised, like, wow, where did that person, come from? So, because again, it's not just what, it's not just what Trump wants about lowering interest rates. It's all the things that I just talked about a few minutes ago. It's you've got the Fed losing $235 billion right now. You have the problems in the Fed's balance sheet. What is their plan for fixing that in the next couple of years? What is their plan for addressing all that? That's whoever could come up with what seems like real and viable answers to those questions. That's going to be who your next head of the Fed is going to be. That, and of course, willing to immediately come in and start cutting interest rates right away. So we'll see what happens on this front. But I just thought, again, we've got some interesting developments here. So, okay, let's dive into tariffs. I have a ton of tariff-related news here this week. First thing, the really big news. I've been telling this the last couple of weeks. Tariff windfall drives surprise, and not really surprise. I knew this was coming the last couple of weeks. I've already reported on this. Tariff windfall drives surprise $27 billion U.S. budget surplus in June. A record high tariff haul in June fueled a rare budget surplus and set the stage for even bigger collections ahead. Yes, I've said this is now the magic of tariffs. You're starting to see all this tariff revenue has come in. And we jumped to, what was it? April had about 17 billion in tariffs, which was double the previous rate. We were sitting at about 8 billion, and then we went to 17 billion. And then in May, we went to 22 billion. Now in June, we have 27 billion. And it's probably going to go a little higher. It's probably going to go into the 30-something billion on a monthly basis. We're going to have this tariff revenue coming in. And this is the part this is one of the things that, I think that Jeremy Powell deserves a lot of criticism, along with a lot of other people, is that they want to focus on the potential, what they call the inflationary side or the cost driving side. They don't ever want to talk about the revenue side. They don't want to point out the unbelievably incredible amount of revenue that we're going to be driving in now. The United States is probably going to be collecting $500 billion in tariff revenues. This is amazing revenue income for the U.S. that the U.S. has not had in a long, long time, because basically presidents for the last 30 plus years have basically said, yeah, and they just have said, no, we're not going to use tariff. We're going to let everybody else use tariffs on us, but we're not going to use tariffs on anybody else, which is insane, literally. And that's not free trade. Us getting taken advantage of by the rest of the world is not free trade. Okay, this and contrary to popular belief, what Trump is doing is just balancing the scale. He's not tipping the scale one way or another. He's balancing it. And so now you see you're just beginning to see the fruits of this. 27 billion record surplus in June. Fantastic. Absolutely incredible. And then I love to give these examples. I've given a few of these examples over the last few weeks and the last couple months, but here's another great example why metal recyclers are optimistic about tariffs. Experts say short-term effects are mixed, but tariffs could boost America's domestic recycling industry in the long run. Now you're going to begin to see the different industries, the different segments of our economy that wait for it are going to see giant boosts from tariffs because they're not being taken advantage of by other countries. So the recycled metals industry is growing domestically and internationally, in part fueled by the rapid expansion of construction and automotive manufacturing. Now, tariffs may be giving it a boost. The U.S. market for scrap metal recycling registered annual growth of 3.7% between 2017 and 2021. The global recycled metal market is expected to expand by 6% annually from 2025 to 2034, according to an analysis by Precedence Research. It was valued at $2.8 billion in 2024. Recently, industry insiders say U.S. recycled metals business haven't experienced any direct impacts from the new tariffs, but they've noticed changes in demand for various alloys. On February 10th, President Donald Trump imposed a 25% tariff on imports of aluminum and steel, raising that to 50% on June 3rd. Recycled metals sourced from North America are not subject to the tariffs. So some U.S. companies are now splitting their metal sourcing. Michael Schmid, a commodities expert and senior financial analyst at Credite Suisse, told the Epoch Times they're using imported metals for the non-critical parts of their operations, but turning to domestic or recycled minerals for essential production because those alloys aren't subject to import duties. Buyers may be reluctant to pay higher prices on imported metals if recycled materials offer similar quality. That shift creates a baseline demand for recycled metals that didn't exist before. Businesses are treating domestic supply like insurance against future supply chain shocks, potentially. So, I've noticed that the tariffs lifted prices at first, but the effect was mixed. Higher costs on imported steel nudged buyers to care more about quality and consistency, which led some recyclers pick up new orders. So then he also said that the tariffs raised equipment expenses and squeezed cash flow. So any upside did come with some extra risk. Overall, the Trump policy opened a door, but it also raised the stakes for everyone in the supply chain. So we shall see how that pans out. But I read this article just to point out that again, it's not all doom and gloom. I think there's a lot of positive. There's a lot of good there to come out of this. You are going to see some benefits in a lot of different organizations and a lot of different industries around the United States. Okay, so I reported on this last week, but I just wanted to throw this back in real quick. So Trump says he struck a deal with Vietnam. So President Donald Trump said Vietnamese officials agreed to a tariff of 20% on goods entering the U.S. from their country. The deal also imposes tariffs of 40% on goods sent to Vietnam and then to the U.S. in an effort to target companies looking to evade higher import taxes. Now, remember that for a second, because we're going to come back to it in just a minute. Vietnam is the second country to reach a trade agreement with the U.S. during the 90-day pause on the most extreme tariffs. So, yes, I talked about this a little bit last week. So he's got this deal with Vietnam, and it's a really good deal. Because basically, Vietnamese officials agreed to a tariff of 20% on goods entering the U.S. From their country. Which is a lot more than what we were getting before. And the deal also imposes tariffs of 40% on goods sent to Vietnam and then to the U.S. So in an effort to target companies looking to evade import taxes. Now, why is that important? Because of this. How Beijing evades tariffs and how the U.S. is fighting it. So Chinese manufacturers didn't just sit back and accept the cost of tariffs, a shipping expert said. So a centerpiece of President Donald Trump's new trade agreement with Vietnam features a steep 40% tariff on trans-shipped goods. Transshipment is a trade strategy employed by countries to sidestep tariffs and other trade barriers. Usually, Products from one country are shipped to another where they are minimally processed, repackaged, or relabeled to make them appear as if they were manufactured in the second country. The Chinese regime has long relied on the practice to avoid U.S. trade restrictions, using Vietnam and other countries as vessels for its goods. This effectively lets China avoid higher tariffs. One of China's most common workarounds has been transshipping. Robert Kachaturian, CEO of Freight Right Global Logistics. When the U.S. imposed Section 301 tariffs on hundreds of billions of dollars of Chinese goods, Chinese manufacturers didn't just sit back and accept the cost. Earlier in 2025, Trump signed executive orders implementing blanket tariffs on all Chinese goods entering the United States, pointing to national security concerns and the fentanyl crisis. While the two sides reached a partial trade deal in June, the Section 301 levies remain in effect. So forecasts vary, but U.S. officials project a sizable dollar value of rerouted exports from China. White House trade advisor Peter Navarro estimates that a third of Vietnamese goods exported to the United States are Chinese products in disguise. Beijing will ship vast quantities of domestic goods, including clothing, electronics, and furniture, to Vietnam. You know, Vietnam sells us $15 for every $1 that we sell them. And about $5 of that is just Chinese product that comes into Vietnam. They slap a made in Vietnam label on it and send it in here. Navarro said in an April interview on Fox News. So again, and I think this is just the beginning. Like, is this one trade deal with Vietnam going to be the end all be all against, you know, getting China to trade or to finally get China to pay up on these tariffs? No, it's not. I think China is doing a lot of business through a lot of countries, you know, Thailand, Cambodia, not only Vietnam, but I'm sure there's probably some stuff that gets into Japan. There's probably some stuff that gets into South Korea. You know, so, you know, I think but once the trade deals start coming in with all of those countries, and you're going to see very similar deals like this that are going to get put through with, you know, Taiwan and South Korea, and you know, also get put through with Japan when the Japan deal comes through. And collectively, as more and more of those trade deals get signed, China's going to get put back in a box, and they're going to get forced into basically coming back to the table. And that's when we will get a real trade deal with China. Okay, now I have to go to this before we get to the next article. So what is dollar weaponization, and how has it sped up de-dollarization? So, okay, so dollar weaponization refers to the expanding use of America's economy, America's currency dominance, trade settlement, access to the Federal Reserve's clearing system, SWIFT messaging, and New York jurisdiction settlement to coerce foreign actors through sanctions, asset freezes, and trade restrictions. The 2022 freeze of roughly $300 billion in Russian reserves marked a watershed. For the first time, a G20 member's sovereign assets were blocked outright, signaling that no holder is too big to sanction. Since then, Washington has doubled down. The budget for the 2025 fiscal year requests a record $231 million for the Treasury's Office of Terrorism and Financial Intelligence to expand sanctions enforcement. But these aggressive moves may actually be undermining the dollar's global dominance. Reserve managers, unnerved, have quickened efforts to diversify into gold, yuan, and regional payment rails, pushing the dollar's share of official reserves below 47% for the first time. So again, dollar weaponization leverages policy tools like sanctions, SWIFT exclusion, and asset seizures to achieve U.S. foreign policy aims. The tactic reached a new level in 2022 with a Russian asset freeze and has expanded every year since. Blowback is tangible. Surveys show a majority of central bankers now view weaponization risk as a primary driver for cutting dollar exposure. So I have talked about this a lot in the last few months, and that is this idea of weaponizing the dollar. You know, that you cannot understate how massive that moment was in 2022 when Joe Biden decided to basically put all these sanctions on Russia, and decided to do it in an economic way that had never been done before. And the whole world took notice when that happened. And it was basically like, wow, if the U.S. will do that to Russia, they can do that to any one of us. And then that really got the BRICS nations, all the nations involved with BRICS, basically all of a sudden that put a lot of momentum around them. And Russia and China got together and grabbed all the other countries in the BRICS nations and said, hey, guys, you better pay attention, because did you see what the U.S. just did to Russia? Well, guess what? If you get on their bad side, they can do that to any one of you. So, do you really want to be at the mercy of the United States? You want to be at the mercy of their government, the mercy of their economic policies, the mercy of the dollar. And so again, and that has basically got the BRICS going. And this past weekend, they had this big Rio reset, which I talked about. Now, what happened? So Trump dropped a bomb last Sunday, and he basically said Trump threatens an extra 10% tariff on countries that align with anti-American BRICS policies. So Trump's announcement came as the BRICS bloc of developed countries is meeting in Rio de Janeiro at the big reset. The bloc's leaders took aim at Trump's sweeping tariff policies in a joint statement over the weekend. The U.S. tariffs announced in April will take effect on August 1st instead of July 9th for countries that have not reached a deal with Washington, D.C. So, now this is what I'm talking about. This is the microphone boom, just dropping the microphone. So Trump's announcement, which did not elaborate on any specific policy of BRICS, came as the group's meeting is underway in Rio de Janeiro. The bloc's leaders appeared to take aim at Trump's sweeping tariff policies in a joint statement on Sunday, warning against unjustified unilateral protectionist measures, including the indiscriminate increase of reciprocal tariffs. Without calling out the U.S., the leaders voiced serious concerns about the rise of unilateral tariffs and non-tariff measures which distort trade and are inconsistent with WTO rules, warning that the proliferation of trade restrictive actions threaten to disrupt the global economy and worsening the existing economic disparities. Any country aligning themselves with this anti-American policies of BRIC will be charged an additional 10% tariff. There will be no exceptions to this policy, Trump said in a post Sunday evening stateside on Truth Social. Trump could have been provoked by the BRICS leaders' joint statement, taking a thinly veiled swipe at his tariff policies, saying Stephen Olson, former U.S. trade negotiator and current visiting senior fellow at the ICEAS Yusuf Isaac Institute. But again, the BRICS were there at this big Rio reset. And again, and I don't think that, people were waiting for, I guess, this big, kind of BRICS announcement of either like, oh, well, we're coming out with our own currency, or we're doing this, or we're doing that, or we're going to create this new global economic system, which is going to run parallel to the existing global economic system. Like there were all these rumors and things about that, but that didn't seem to come out at Rio. At least this event that they just had over the weekend. And and again, maybe what Trump did had an influence on some of this. I don't know, but basically, Trump, went in and basically said, hey, man, look, if you're going to sign up and you're going to sign up for basically things that are going to hurt the U.S. dollar or the dominance of the U.S. dollar, yeah, we're gonna bash you with tariffs. Okay, that's how this is going to go. And again, I think the message got sent loud and clear to all of those nations at the BRICS conference that basically like, hey, look, at least for the time being, you better continue to play ball with the U.S. Otherwise, this isn't going to be good for you. But like I said, in order to kind of explain this article, I had to go to the previous article, basically explaining like what is dollar weaponization, what led the BRICS to be looking into doing some of the things that they're doing, what led to that meeting of the Great Rio Reset, and why a lot of this stuff is happening. So, but all right, let's continue rolling through here with this other stuff. So Trump announces 35% tariff on Canada, possible 15 to 20% tariffs on other countries. The new rate will go into effect on August 1st. Canada, man, the people up there are just stupid. They're stupid. Like I don't know what they're doing. That should not be happening to them right now. And all they had to do was come to the table, negotiate, and work out a deal. But no, they had to be idiots. And now they're they're going to pay for it in a big way. So President Donald Trump said on July 10th that he would impose a blanket 35% tariff on Canadian imports. In a letter posted to Truth Social platform, Trump told Canadian Prime Minister Mark Carney that the new tariff rate would take effect on August 1st. As you will recall, the United States imposed tariffs on Canada to deal with our nation's fentanyl crisis, which is caused in part by Canada's failure to stop the drugs from pouring into our country, Trump wrote. Instead of working with the United States, Canada retaliated with its own tariffs. Starting August 1st, 2025, we will charge Canada a tariff of 35% on Canadian products sent into the United States, separate from all sectoral tariffs. Carney had earlier said that the two leaders agreed during the G7 summit in Canada on June 16th to reach a trade deal within 30 days. On June 27th, Trump said he would end all trade talks with Canada unless Ottawa removed its digital services tax, which imposed a 3% levy on revenue tech companies such as Amazon received from Canadian customers. The tax had been a trade irritant for both the Biden and Trump administrations. Canada announced 2 days later that it would rescind the DST, with Carney adding that the two countries are back on track to reach a new trade deal by July 21st. In this July 10th letter, Trump pointed to the other trade irritant Washington has with Ottawa, Canada's dairy supply management system. Canada charges extraordinary tariffs to our dairy farmers, up to 400%. And that is even assuming our dairy farmers even have access to sell their products to the people of Canada. So yes, and I have talked about that endlessly, that yeah, Canada like kills us with some of their tariffs. Now this is really interesting. Here's how each country's tariffs will be starting August 1st, according to Trump's letter. So we can see here. So basically, Japan will be 24%, South Korea 25%, Malaysia 24%, Kazakhstan 27%, South Africa 30%, Laos 48%, Myanmar 44%, Bosnia and Herzegovina 35%, Thailand 36%, Cambodia 49%, Serbia 37%, Bangladesh 37%, Indonesia 32%, Tunisia 28%, Algeria 30%, Libya 31%, Sri Lanka 44%, Iraq 39%, Moldova 31%, Philippines 17%, Brunei 24%, and Brazil 10%. And those were all the ones. Those were basically all the ones announced after April 2nd. So some of these other ones could be higher here coming in. Brazil, obviously, we'll talk about this in a second, could be at 50%. Now, again, here's my thought on this. I think a lot of these tariffs are this is just to get them to come back to the table. Do I think that we will really be getting these high tariffs from a lot of these countries? No. Like with Japan, could Japan's be negotiated back down to 10% or 15% or something like that? Yeah, I think that's probably realistic, or probably something like that will happen. But they're being pegged at a lot of these higher rates to basically, this is the shot across the bow, so to speak. This is the wake-up call. Like, you got to come to the table. You got to negotiate. You're not just going to get away paying nothing and charging us over the moon. That's not going to work anymore. You're going to have to come back and do something more realistic. So, so again, I think it's just interesting to point out what this is. Trump announces steep tariffs on 14 countries starting on August 1st. So again, a lot of the countries that I just pointed out, basically is going to start August 1st. Trump threatens Brazil with 50% tariffs, citing trial of former president. So Brazil's former president, Javier Bolsonaro, is being tried on charges of attempting to stage a coup against the current president, Lula da Silva. So among a batch of letters that U.S. President Trump sent out to several U.S. trading partners on July 9th, was one issued to Brazil threatening to impose a 50% tariff on its exports to the United States. Trump posted on a social media platform, Truth Social, on July 9th, a copy of his letter to Brazilian President Lula, in which he accused the nation of becoming an international disgrace because of the ongoing trial of its former president, Javier Bolsonaro, the Trump ally. Yes, so we shall see what happens with this one as this continues to ramp up. Another article here from CNBC. So Brazil will respond to Trump's 50% tariff with reciprocity, says De Silva. Yeah, okay, whatever. He could talk tough, but that ain't going nowhere. Trump says 50% tariff on copper imports will begin August 1st. So the decision was made after he received a national security assessment. U.S. President Donald Trump said in a post on Truth Social, copper prices rose 2.62% following Trump's latest announcement. The U.S. imports nearly half of the copper it uses. So, yes, so I think for a national security purposes, we now have this tariff on copper, which is going to take effect on August 1st. And, again, we'll have to monitor this and see what happens with that. Trump threatens to impose up to a 200% tariff on pharmaceuticals starting very soon. So President Donald Trump threatens to impose up to 200% tariffs on pharmaceuticals imported to the U.S. very soon. But he suggested that those levies would not go into effect immediately, saying he will give people about a year and a half. Those planned tariffs would deal a long-awaited blow to pharmaceutical companies, many of which has pushed back and warned that the levies could drive up costs, deter investments in the U.S., and disrupt the drug supply chain, ultimately putting patients at risk. So we shall see what happens with that one, though. Trump advisor Peter Navarro rips Apple's Tim Cook, saying he's not moving production out of China fast enough. So White House trade advisor Peter Navarro criticized Apple CEO Tim Cook, saying the company is not moving production out of China fast enough. President Donald Trump has ramped up pressure on Apple to make more of its products in the U.S. Navarro argued Cook has delayed moving production out of China, calling it the longest-running soap opera in Silicon Valley. So, yes, we will see what Apple does there. All right, and then we'll come back to some of these other articles, but at this time in our program, I basically like to take a somewhat break from the news articles to go into the episodes that I had out this week. I also like to give everybody the economic indicators that will be coming out this week. And I like to talk about a lot of the banking news that's out there. So, okay, let's start off with this. So the Senate confirmed Jonathan Gould to serve as the controller of the currency in a 50-45 vote on Thursday. Gould, and it's not gold, it's Gould. Gould, who served as a senior deputy controller and chief counsel at the Office of the Controller of the Currency, also known as the OCC. During the first Trump administration, will succeed acting controller Rodney Hood and become the OCC's first permanent chief since Joseph Otting in 2020. Jonathan will continue the important work started by acting controller Hood to return the OCC to its true purpose of chartering and supervising banks to ensure a safe and sound banking system. Senate Banking Committee Republicans said in a statement Thursday on X. The American Bankers Association, in its own statement Thursday, said it looks forward to working with Controller Gould on a number of important regulatory issues in the years ahead, including advancing a rational regulatory framework that promotes a resilient and healthy national banking system and upholding the OCC's commitment to national bank preemption. So there you have that. Okay. So what economic indicators do we have coming out this week? So, well, let's see here. We have on Tuesday, July 15th, we get the core CPI. We get FOMC member Michelle Mickey Bowman is speaking at 9:15. The Fed Vice Chair for Supervision, Michael Barr, is going to speak at 12:45. And then we get the API Weekly Crude Oil Outlook. On Wednesday, July 16th, we get PPI, Industrial Production, the Beige Book at 2 o'clock. On Thursday, July 17th, we get continuing jobless claims, initial jobless claims, the Philadelphia Fed Manufacturing Index, retail sales, and the Atlanta Fed GDP Now for the second quarter of 2025. And then finally, on Friday, July 18th, we get building permits, housing starts, the Michigan consumer sentiment, and the U.S. Baker Hughes total rig count. So those are a lot of economic indicators coming out next week. Got a lot of inflation data with the CPI and the PPI coming out. We've also got the Beige Book, and then we got some jobless numbers with continuing and initial jobless claims, and then some real estate numbers with building permits and housing starts, retail sales, which we'll talk about in a few minutes. And then obviously Atlanta Fed is with their I guess initial estimates on the GDP now. So those are the economic indicators we got coming out for this week coming up. So, okay, let us hit some bank news. I got a ton of bank news here this week, man. So FDIC publishes consumer compliance supervisory highlights. I'll actually going to cover this in an episode, but the FDIC published its annual consumer compliance supervisory highlights, which includes a summary of the overall consumer compliance performance of FDIC supervised institutions in 2024, the most frequently cited violations, and an overview of consumer complaint trends. So believe it or not totally boring. Actually, some interesting things that are in there. Also, mortgage rates dropped. So we got the rate for a 30-year fixed rate mortgage was 6.67% this week, down from 6.77% last week. The 15-year FRM averaged 5.80, down from last week's 5.89. So mortgage rates not doing too bad at the moment. Okay, budget reconciliation bill with pro-community bank policies got signed into law. So President Donald Trump signed into law the One Big Beautiful Bill Act budget reconciliation package after the House of Representatives passed it on a 218 to 214 vote. ICBA advocated provisions of the bill included the Acre Act policy to make 25% of interest income on agricultural and ranch real estate loans exempt from federal taxation. Which will provide interest rate relief for U.S. farmers and ranchers. That's great. Making permanent the Section 199A deduction to support Subchapter S community banks and other pass-through businesses. Again, that's fantastic. Making permanent low individual rates, a higher state tax exemption, and a higher alternative minimum tax exemption to promote economic growth. So again, all fantastic things going on there. Georgia approves Stripe application to form MALPB. So the state of Georgia approved Stripe's application for a merchant acquirer limited purpose bank charter, or MLPB. What does this mean? Well, the charter will allow the financial services company to obtain direct membership with Visa and MasterCard and to process payments without a sponsoring bank. So very, very, very interesting there. We'll have to keep an eye on that and see how that goes with Stripe. But that is definitely a very interesting development there indeed. The small business optimism remained steady in June, with the NFIB reported its small business optimism index decreased slightly in June, edging down just 0.2 to 98.6 to remain just above the 51-year average of 98. Consumer credit growth slowed in May. So consumer credit increased just 1.2% in May after increasing 4.3% in April. Community banker optimism holds steady. So community bankers' optimism on the future economy is holding steady, according to the Conference of Bank State Supervisors' second quarter Community Bank Sentiment Index. New Jersey bill would extend CRA to credit unions and non-bank lenders. So just as Georgia made this move with this bank charter, New Jersey actually went in a different direction, actually extending the CRA, which is the Community Reinvestment Act. So lawmakers in New Jersey introduced a bill that would extend Community Reinvestment Act review to credit unions, online institutions, and non-bank mortgage lenders. Now, I would tell you that all of those institutions are currently exempt from the CRA. A lot of people don't know that, but yeah, they're currently exempt from the CRA. So S 4694 establishes a CRA law for New Jersey that would require similar analysis and evaluation of banks, mortgage companies, and credit unions to determine and rate if they are lending, investing, and providing financial services to low and moderate income consumers and communities. So states with similar laws include Illinois, Massachusetts, and New York have adopted similar legislation. So we'll keep an eye on this. I really wouldn't be surprised if there is more coming down the pike on that. Obviously, CRA has been a topic of big discussion because there was a lot of new CRA rules that got put out, but now they're being clawed back because a lot of bankers out there didn't like the new designs of the CRA and how that was being put together. So this kind of adds just like another wrinkle to that. And we'll, like I said, we'll continue to monitor that to see if there's any further inputs after that, goes through. So Fed seeks input on revising rating framework for large banks. So the Federal Reserve Board requested comments on a targeted proposal to revise its supervisory rating framework for large bank holding companies. The proposal would loosen requirements for the ratings a firm must receive to be considered well managed, a determination that grants a firm the ability to engage in a broader range of activities and investments, as well as to qualify for expedited processing in certain areas. So we'll get that, comment period going on there. FHFA's Pulte, Fannie and Freddie will allow lenders to use the VantageScore 4.0. Now, this again was something that I had reported on in prior episodes, how Fannie Mae and Freddie Mac were talking about using basically a couple of different FICO scores, a different FICO score model along with this VantageScore 4.0. So it sounds like the FHFA director, Bill Pulte, announced that they will have an initiative to transition to the VantageScore 4.0 credit scoring model, but this will be optional. So on X, Pulte posted that to increase competition to the credit score ecosystem and lower costs, Fannie Mae and Freddie Mac will allow lenders to use Vantage 4.0 score with no current requirement to build new infrastructure. Use of Vantage score is optional, and lenders may continue to use FICO scores as well. So in 2022, an FHFA initiative included the validation of two new credit score models, the FICO 10T and VantageScore 4.0, for use by Fannie and Freddie. It also introduced a buy-merge option, allowing lenders to use credit scores from two of the credit reporting agencies instead of the traditional tri-merge. So on X, Pulte said lenders will continue to use the tri-merge if they so choose to do so. So again, that could have some good ramifications on people being able to get mortgages, but we'll have to see. Another caveat that I would throw out there, Bill Pulte also said that banks would now be able to use monthly rent payments and as part of the analysis and underwriting for being able to grant people approvals for mortgages. So in other words, if you've been renting an apartment or a house for 5 years or 10 years, and you could show that payment history from your landlord that basically you've made your monthly payment on time every month, that can now be used as part of the underwriting criteria to basically show you as worthy of getting a mortgage. So again, if you're making your mortgage, that is great to me. I think that makes total sense. I mean, if you're making your mortgage payment on time every month, and that mortgage payment or that rent payment is similar to what the mortgage payment you're going to have, well, obviously that shows you have the ability to repay. So why wouldn't you use that? So the FedWire ISO 20022 transition starts today, and that was yesterday. The Federal Reserve will implement the ISO 2022 message format for the FedWire Fund Service this Monday, July 14th, with the transition getting underway today. So the existing proprietary FedWire application interface manual format will sunset today. And the Fed recommends banks finalize their preparedness and contingency plans as soon as possible and test and verify their internal procedures through the week. This new Fed ISO update is, again, something that I have reported on in past episodes. So if you're not really familiar with that or want to learn a little bit more about it, go back and check that out. And let me see what else I got here. I did have some stuff from last week that I wasn't able to get to. Let me just run through this. Recent IBA polling shows public support for fighting check fraud. Yes, there's a lot of check fraud out there for everybody who doesn't know. This was a big one. CFPB confirms plan to issue new rule on 1071 and extend the deadlines. So the Consumer Financial Protection Bureau said it plans to issue new Section 1071 rulemaking as soon as possible and has extended compliance deadlines for most entities by 1 year, an extension designed to protect lenders that are not members of ICBA and not otherwise protected by the current stay. Details in a status report filed with the Fifth Circuit and ICBA's lawsuit challenging the Section 1071 rule. The CFPB informed the court of its plan to initiate a new rulemaking process for Section 1071. The CFPB said it plans to issue a new proposed rule as expeditiously as expeditiously as reasonably possible. They couldn't just said as reasonably possible. Confirmed it will extend compliance deadlines under the 2023 rule by approximately 1 year for all regulated entities. The earliest compliance date now applying to the largest volume lenders is set for July 1st, 2026. Confirmed it will not prioritize enforcement or supervision of the existing rule during this period, and asked the court to maintain the current stay and tolling of compliance deadlines for plaintiffs and interveners while the rulemaking proceeds. Now, 1071 was big. I had 3 hot button regulatory issues at the beginning of the year. I had open banking, I had the beneficial ownership information, and I had the 1071 rule. Now, what is the 1071 rule? 1071 rule means that banks would have to start reporting a ton of demographic and other information on all of their small business customers. So basically, when somebody comes in, when you go in now to get a mortgage, whether you realize it or not, the bank has to send you got HMDA, and the bank has to comply with HMDA, and therefore they have to send a ton of information to HMDA on you, on what you're reporting. Now, that was never really the case with small business loans and small business lending at banks for as long as I can remember. But 1071 was a rule that came out of the Dodd-Frank Act and has basically been sitting out there for the last 15 years. It's just something that has never been implemented. Well, finally, the Biden administration was like, okay, we're going to put this in. But again, it's just more, in my mind, it's just more government overreach. It's just more regulatory cost, regulatory burden on banks that doesn't really need to be there. It is that, again, more data is not always the answer. It's not, again, it's not doing anything. And it just like, I had other issues with open banking and with BOI, but it's so again, and I think they're going to revamp the 1071 rule. I'm just hoping that it's going to be okay. They'll get it to a point where it'll at least be more palatable, and banks, it won't be a big regulatory cost on banks, and it won't be overly invasive on small business owners. So that's my hope there. Okay, Senate passes budget reconciliation bill. Yeah, we talked about that already. ICBA details community bank advocacy successes. Not the wrong word. Successes at half-year mark. This is a clean show here. ICBA opposes National Trust Bank charter application. So the ICBA expressed opposition to the National Digital Trust Company's application to form a national trust bank. So yes, that we'll have to keep an eye on that one. OCC commercial credit risk is increasing. So the OCC said the federal banking system remains sound, but downward movement in some macroeconomic indicators have increased economic uncertainty. So yeah, we'll have to keep an eye on some of that. Agencies authorize alternative collection of tax identification numbers. The Financial Crimes Enforcement Network issued an ICBA advocated order permitting banks to collect tax identification number information from third parties rather than from bank customers. So under the Customer Identification Program, the CIP rule, which was implemented in 2003 under the U.S. Patriot Act, banks are required to collect a full tax identification number, generally a social security number, from a U.S. customers prior to opening an account. Nothing new there. But what is this new order? Well, this issued an injunction with the FDIC, the OCC, and National Credit Union Administration. FinCEN's new order authorizes alternative collection of tax identification numbers for banks that otherwise comply with the CIP rule. The exemption is optional and does not change the underlying requirement that banks have risk-based CIP procedures that enable them to form a reasonable belief they know the true identity of each customer. So what does it mean for community banks? Well, FinCEN Director Andrea Gacki said the new exemption is designed to reduce burdens for covered institutions by providing banks with greater flexibility in determining how to fulfill their regulatory obligations without presenting a heightened risk of money laundering, terrorist financing, or other illicit financial activity. I've got to be honest with you. I don't really get this one. I don't understand this one. I mean, if a bank's opening accounts, if you're not giving them your social security number, and if you're not giving them a tax EIN number for the business entity, they're not going to open the account. Like, it's just that simple. Like, they're not going to open the account and say, oh yeah, just, bring that social security or that tax ID number, bring that back to us in a week. Like, no, you're going to have to come in, you're going to have to give them the numbers. You're going to have to provide proof of those numbers. I don't understand, what is this? They'd have to, go out and get the number from third parties. Like, I don't, it's just, I don't know. Yeah, just kind of weird to me. So, ICB backs bipartisan bill to update small issue bond programs. So, yeah, okay, interesting. Regulators close a Texas bank. So regulators closed Santa Ana National Bank of Santa Ana, Texas, with the FDIC entering into a purchase and assumption agreement with Coleman County State Bank of Coleman, Texas. So yes, I'll report more about that on the end. That is the second bank to be closed this year. Agencies request comment on easing capital standards on the largest banks. So the federal banking regulators requested comment on a proposal to modify regulatory capital standards for the largest banking organizations. So obviously we'll hear more about that. Obviously they're requesting a comments period, so we'll see where that goes. So, okay. All right. So that is banking news. So now let me just talk very quickly for a couple minutes. I just want to talk about the episodes that I put out this week. So this week was a special week. This week, I called this week Book Week. So I covered 5 books that were all, biographies or semi-biographies on 5 different individuals from the world of finance, world of banking, world of finance, world of business. And I was hoping that these profiles would be very interesting to people. So on Monday, I did episode 419, which was a book review for Reminiscences of a Stock Operator. And this was about Jesse Livermore. So this episode was a book review on Reminiscence of a Stock Operator, written by Edwin Lefevre. The book is a fictionalized biography about Jesse Livermore, who was one of the greatest stock traders that ever lived. This book is a financial classic and one of the most recommended investment books ever written. And, so Jesse was a trader that, lived in the late 18th century, or late 1800s, early 1900s. He basically made fortunes and lost fortunes in the market. He had made millions and lost it in the panic of 1907. And then he came back, made millions of dollars again, and then lost it all in the Great Depression. But they estimate that he had earned a trading, he had trading income, I think, of over $100 million in his life, which was an astronomical sum. I mean, it was an astronomical amount of money back then. But the book is great because it puts you perfectly in that time period. Like, if you want to know about like early Wall Street, the early trading houses and different things that went on there, like that book is phenomenal. I love that book. Great book for the time period. Like I said, it is an investment classic, and I hope people would find that interesting. Then on Tuesday, I did episode 420, which was a book review of Trump, The Art of the Deal, and this is about Donald Trump. So this book review was the book Trump, The Art of the Deal by Donald J. Trump and Tony Schwartz. This book is also a business classic. It gives you a peek into the day-to-day life of a real estate developer. This book follows Trump through his early years and goes through various real estate projects completed in the 1970s and 1980s. Now, look, regardless of whether people like it or not, that book, in certain respects, is a business classic. It's a colorful book. It's an entertaining book. It's an easy book to read. You get to read about, Trump's early years. If you want to get a better understanding of Donald Trump, if you want to get a better idea of what his early life was like and his early career was like, read that book, because he talks about all of the big deals that he did, first deal that he did, and then his bigger deals in New York City. And it's very entertaining. So it really, and I love the book because it kind of puts you in to the mindset of, what's it like a day in the life of a real estate developer. What is that? What does that look like? And I'm not just talking about any old real estate developer. I'm talking about like a big time real estate developer. What does that look like? And this book also it puts you in that time frame too of like the 70s and 80s. So again, if you want to kind of understand that period a little bit better, it's a great book for a number of reasons. So then I moved on Wednesday. I did episode 421, which was a book review for The Greatest Trade Ever. Now, this was about John Paulson. So this episode was a book review of The Greatest Trade Ever, the behind-the-scenes story of how John Paulson defied Wall Street and made financial history. And this was written by Gregory Zuckerman. So in 2006, John Paulson ran a small, middling hedge fund on Wall Street. He saw the housing crisis coming and figured out a way to bet against the market. While all the professionals doubted him, John Paulson pulled off the greatest trade in financial history, earning more than $15 billion for his firm in 2007. It is literally still the greatest trade from a monetary perspective, the greatest trade ever made. It is a very interesting story, and I would tell you, if you read this book and you also read the books or watch the movies, Too Big to Fail and The Big Short, if you kind of watch all three of those together, you get a very like an all-encompassing view of the 07, 08, 09 financial crisis. So you really get a view of what was happening with the regulators and the banks, what was happening against the people that bet against the system. Why was the system imploding? So those are all three of those movies are actually, well, this one doesn't have a movie, but they're never going to make a movie about John Paulson shorting the market and getting $15 million. They're never going to do that. Maybe he'll get a miniseries. Maybe he'll get a Netflix documentary. That's what he'll get. He'll get a 3-part, 3-hour Netflix documentary. That's what he'll get out of this at some point. But they're never going to do a big Hollywood movie about this. But yeah, like I said, great book, great story, really puts you in the mood, really gives you some more insight into, kind of what happened in 07 and how he was able to bet against the market and win. So really, really fascinating book. Then on Thursday, I did episode 422, which was a book review of Millionaire. Now, this was a story of John Law. So this episode was a book review for Millionaire, the philanderer, gambler, and duelist who invented modern finance by Janet Gleason. So now imagine, if you will, if you've ever seen the movie The Wolf of Wall Street. Okay, now think of The Wolf of Wall Street, but this story takes place in 1716. And this is the wild story of John Law and the birth of modern finance. So Law was able to remake the French economy in a time when the government teetered on the brink of bankruptcy, making him one of the most successful men in Europe. His amazing success could only be rivaled by his monumental failure. The economic experience in France between 1716 and 1720 gave birth to what we now know as the first boom and bust cycle, a moment that created so much vast wealth for shareholders, and a new term was coined that described them: millionaires. So yeah, I mean, just an absolutely wild, fantastic story. John Law, early in his life, got in a duel with a guy. He was, John Law was a Scottish guy. And he goes down to London, and while he's in London, he kind of gets in a fight with this other young guy. They have a duel with swords. He stabs the guy, kills him. He gets held on trial, gets found guilty of murder, escapes from the jail, bolts out of London, spends the vast majority of his life trying to get a pardon from the King of England for a long time. I think he was eventually successful in that, but anyway, then he becomes this big time gambler, makes all his money gambling, going all over Europe. He becomes basically very famous for being this great gambler, all through, just traveling all over Europe. But then he's a brilliant guy. He's probably had a genius level IQ, and he really studied finance and economics of his time, and he would write all these papers and give these little like treaties, on economics and different ideas and thoughts that he had and different things that could be tried. And he went to a lot of countries and basically said, hey, will you give me a chance to maybe try some of these economic policies? And nobody was willing to give him a chance until he got to France. And then when he got to France, France was basically so desperate that they said, yeah, okay. And then he basically created the Mississippi Company, which turned into the Mississippi Bubble. And, so that, what started out great just turned into a complete and utter economic calamity, which ended up him getting booted out of France and basically dying a broke, man a few years. And he only died a few years after this happened. I think he died in 1729. So it was only about 8 or, and this whole thing really unfolded also through 1721. He was under house arrest in France. He was worried that, he was worried that everybody was going to, like the gangster movies. He was worried somebody was going to come by and cap him. He had no shortage of people that probably wanted him dead at that moment. So it was, very, but again, great story, absolutely phenomenal. So I think they should make a movie out of this. I think they should absolutely make a movie out of John Law and his life. I think people would love it. I think they'd find it I think they'd find it fascinating and entertaining all at the same time. And then finally, the last episode I did for the week on Friday was episode 423, and this was a book review of the granddaddy of them all, John Jacob Astor. So this episode was a book review for John Jacob Astor and the First Great American Fortune, written by Alexander Emmerich. The biography traces Astor's rise from a German immigrant to the wealthiest man in America. The first modern millionaire, Astor created the template for what we now think of as an entrepreneur, a businessman, an investor, a real estate developer, and a philanthropist. He created businesses. He created the first American settlement on the Pacific coast, known as Astoria, Oregon, still there today. He created hotels such as the Astor House and the Waldorf Astoria. He donated the Astor Library to the city of New York. This man's impact on American life and American business cannot be understated. He set the template for everything that we now know or think of, like in terms of when you think entrepreneur, when you think businessman, when you think investor, when you think real estate developer, philanthropist, these are all words now, but back in his day, in the late 1700s, early 1800s, these were not the things that were thought of. Sure, there were people that owned businesses, but he changed the definition of these things. He changed, what is now thought of as a real estate developer, as a real estate investor, as a business investor. Like these were things that were all, he changed the whole idea, the concept of the American dream. He took it to a whole nother level, and why his, impact is so important is that, everybody that came thereafter, basically he set the mold, man, and everybody that came after, basically put in his image. And there are so many things like, when we think of the holiday classic, A Christmas Carol with Scrooge, his character was based on John Jacob Astor. When you think of Monty Burns from The Simpsons, Monty Burns again was based on John Jacob Astor. Like his effect on just the pop culture, so many elements of American society. And what's crazy is I think so many people don't know him, don't know about him, don't understand who he was or what he did. It's almost sad to me to believe that he's gotten, forgotten in a lot of ways. One of his descendants, died on the Titanic. I forget, John, it might've been John Astor III. I think it might've been, died, went down with the Titanic. There again, his impact on, American society, American culture, American business. It just went on and on and on and on. And that's why I saved him for last, because I think he is absolutely Out of the 5 people that I covered, he is by far the most fascinating, had the greatest impact on American life and American business. And, the University of Pennsylvania literally does a whole class on John Jacob Astor, a whole class dedicated just to him and his life and everything that he did, because he did that much, and he had that much of an impact that he's absolutely worth having his own class, looking at all the different things that he was involved with. So I did, so again, I did that book review on Friday. So that completed book review week. This week coming up, I have, I'm kind of back to doing all regular episodes. I have a couple of new interviews coming out this week, a couple of new different things, and another update to the crypto series coming out this week, and then a couple of other interesting episodes to hopefully keep everyone entertained. So, okay, that is what I have for the episodes. Now let's get back to some articles here with the time that we have left. Okay, so let's get back here. Where are we at? We lost here. Okay, the big beautiful bill may help some seniors on Social Security, but it doesn't eliminate taxes on benefits. So the big beautiful bill includes a $6,000 additional deduction for certain older Americans age 65 and over. However, the legislation does not end federal income taxes on Social Security benefits. Here's how the changes in the bill may impact current and future retirees. So the Social Security Administration sent what experts say is a misleading email to consumers last week, describing President Donald Trump's one big beautiful bill as long-awaited tax relief to millions of older Americans. In that email and a July 3rd press release, the agency said the legislation will make it so nearly 90% of Social Security beneficiaries no longer pay federal income taxes on benefits. It attributed that to an additional $6,000 senior deduction and another unspecified provision. Tax experts say that that is not accurate. The legislation does not, as the agency put it in its initial release, include a provision that eliminates federal income taxes on Social Security benefits for most beneficiaries. Moreover, while the Social Security Administration memo said the law helps protect Social Security, experts say the provisions will weaken the program's funding by reducing the tax money it receives. It's simply not correct to say that there's a provision in this bill that is going to eliminate Social Security benefit taxes for 90% of the population, said Howard Gleckman, senior fellow at the Urban Brookings Tax Policy Center. And it's also just wrong to say that this is going to preserve the solvency of Social Security. The Social Security Administration issued a correction notice on the announcement on Monday to specify that the legislation eliminates federal income tax on Social Security benefits for many taxpayers by providing an enhanced deduction for taxpayers age 65 and older, ensuring that retirees can keep more of what they have earned. I would also add there that this is only good through 2028. So basically you're going to have, 25, 26, 27, 28. You're going to have 4 years of basically this enhanced write-off. So basically what they're saying, I think both things are true. I think that the initial email and the correspondence that got sent out on this was incorrect. However, it's not totally untrue. When they say that it's going to eliminate Social Security benefits for up to 90% of the population. So what they're saying is you're going to get taxed. They're going to say you're going to get taxed on your Social Security, right? And say your total tax for your Social Security income is $4,500. Okay. Well, you're going to have this $6,000 tax write-off, which is basically going to eliminate those taxes. So, or it's basically, you're not going to have to pay those taxes. So and basically they're saying that, 90% of the people in the US will fall into that $6,000 tax benefit, if that's making sense to everyone out there. So you're still paying the taxes, but then you're going to get it right back because you're going to get this tax write-off. And this will benefit, it will help many retirees out there on Social Security. Is this perfect? Is this what I think? I think most people just wanted them to stop tax on Social Security. And I would remind people that Social Security was not always taxed. Social Security did not get taxed until 1983 when they made an amendment to the Social Security Act to wait for it to start taxing Social Security benefits. Up until 1983, those benefits were not touched. You paid into your Social Security, you paid your taxes, and then when you got your Social Security benefits, you just got your benefit. There were no taxes on it. I think it's ridiculous that Social Security gets taxed, because that's your money. You paid into that for all these 40, 45, 50 years of working. You paid into that. You should not have to pay tax on that money. It's ridiculous. But again, is this perfect? No. Will this help a lot of retirees out there? Yes, it absolutely will. I guess my issue is that I really didn't want a kind of a tax credit or a tax add-on of some kind. I just wanted them to just stop taxing Social Security benefits, period. And I wanted it to be a permanent thing. I didn't want it. And again, this benefit, and I'm getting tired of these deals where it's like, oh, well, we put this out there, but we're only putting it out there for 4 years, and then we'll have to come back and now, of course, the politicians love this because it gives them a reason to fight, right? And a reason, oh, if you don't come back and reelect us at 4 years, you're going to lose this, so you better come back and vote for us. Like, I just think that's BS. I think they should do these things and make it permanent, and that's the end of it, and then we don't have to come back and talk about this anymore. So again, yeah, but like I said, I wanted to point this out. I thought it was important to point this out because, again, I hope that people were not misled into thinking that, there's no more tax on Social Security benefits and this is great, whatever. That's not the case of what is actually happening here. So, okay. So let's look at some other things here real quick. So retail sales fell in the month of June for the first time in months, the National Retail Federation says. So National Retail Federation reported Friday that core retail spending fell in June for the first time since February. The trade group thinks consumers are adopting a cautious attitude because of uncertainty around tariffs, trade policy, and the economy. But import taxes have yet to make a significant impact on many prices. Oppenheimer analysts said, adding that increases remain forthcoming. So, all right, we'll see what happens. As I always say, 1 month does not a trend make. All right, let's see here. Home buyers finally responded after mortgage rates hit lowest level in 3 months. So I said earlier that the mortgage rate on a 30-year mortgage had dropped down to 6.77%. And that caused applications to refinance a home loan rose 9% for the week and were 56% higher than the same week 1 year ago. Applications for a mortgage to purchase a home also rose 9% for the week and were 25% higher than the same week 1 year ago. So obviously, the more we could get interest rates down, the more that is going to stimulate the real estate market, obviously. Here's something very interesting. Pentagon to become the largest shareholder in a rare earth miner, MP Materials, and because of that, the shares surged 50%. So the Defense Department will buy $400 million of preferred stock in MP Materials. MP Materials owns the only operational rare earth mine in the U.S. at Mount Pass in California. It will build a second magnet manufacturing facility in the U.S. with the support of the Pentagon. Rare earths are key components in a range of military weapon systems. This is obviously, so the Defense Department will become the largest shareholder in rare earth miner MP Materials after agreeing to buy $400 million of its preferred stock. MP Materials owns the only operational rare earth mine, shares of MP Minerals Sword. Rare earths are used in magnets that are key components in a range of military weapon systems, including the F-35 warplane, drones, and submarines, according to the Defense Department. The U.S. was almost entirely dependent on foreign countries for rare earths in 2023, with China representing about 70% of imports, according to the U.S. Geological Survey. Rare earths have been a central point of contention in recent trade disputes between the U.S. and China. So obviously very interesting, and we'll have to keep an eye on that one, see how that progresses. Trump's big, beautiful bill slashes CFP funding, what it means for you. So President Trump signed a so-called big, beautiful bill on July 4th that nearly halves annual funding for the CFPB. CFPB funding would fall to 6.5% of its annual operating expenses, of the Federal Reserve, down from 12%. That's the lowest share in agency history. Consumer advocates say the funding will weaken the Bureau's ability to police financial firms and consumer financial laws. Yeah, I'm not going to weep over one less regulator. I've got plenty more regulators where that one came from. There's so many regulators right now today. It's ridiculous. I am of the mind that I think some of these regulators should be consolidated, and then I just want people to think about this for a minute, okay? As the number of banks decrease, why do the budgets and why do we have to keep adding more regulators? Why do the regulators that exist have to keep growing? Like, look at the FDIC, for example. FDIC has a $3 billion budget and 6,000 employees. I mean, really? I mean, there's more. There's like 4,600 banks in America, and you got, and I mean, that's way down. I mean, you go back to 1980. And you had probably about 14,000 banks in the country. You're now down to about 4,500. But yet the FDIC's budget and number of employees just continues to grow and grow. And I sit there and I go, with the advances in technology and how technology continues to advance, and they want to do reviews and audits and everything remotely now. And they want to just basically get the data, review it, and then have somebody come do a follow-up with you. Why, it's not like in years past when you would have, 20 people from the FDIC that would come into your bank and camp out there for 2 weeks and then do a review and wrap up with you. No, it's more like they contact you, you send them the information, they review it. They send 2 people out to you, they review it for a couple of weeks. They come back to you with some thoughts. They send a couple people out to do a face-to-face meeting just to do a kind of a recap. But that's what they do now. So and I just say that to basically say, like, could you be, as if banks continue to consolidate like they think will happen. Like, in other words, if we get down to like 3,000 banks, do you need 16 regulators? Do you and every one of those regulators has got billion-dollar budgets and thousands and thousands of employees? Do you really need all that? I mean, seriously, you seriously don't think that you could combine 4 or 5 of those regulators together and cut the budget and cut the number of employees in half, and still maintain all the operational efficiencies and still be able to do the job and make sure that everything is running the way it should? I think you absolutely could. I I don't think there's any question about it. So again, yeah, I'm not the one. I'm not going to weep for the demise of the CFPB. I just, not going to do it. Okay. This is kind of interesting. Why Gen Z believes side hustles are the key to a secure retirement. So despite starting to save earlier than some older generations, members of Generation Z have substantial doubts about ever being able to retire. So many plan to work beyond retirement age to protect themselves financially. In fact, their financial stress and insecurity about the future are reasons that many Gen Zers take on multiple jobs. So one study found that 39% of Gen Z individuals believe that they would have to work a side hustle to make ends meet. Over 50% of Gen Zers have side hustles, and 48% intend to keep them always. Side gigs can include pet sitting, babysitting, tutoring, or driving for a rideshare company. Now, yeah, hey, dude, I think side hustles are great. I'm doing my side hustle right now. Yeah, so so I love the go-getter attitude, but I think some of this might be because kind of they have to do it. And there was another article I had here. Yeah, okay, here we go. One job is not enough. So surveys show record number of Americans hold side hustles. So economic pressure is reshaping the traditional 9 to 5 work routine, a report says. So yeah, so I think there is a little bit more pressure than people think right now. I don't think it's just about having a side hustle or saving a little bit more money for retirement. I think people are doing it really at more so out of necessity than anything else. So just very interesting. Now, here is an interesting article. What lies ahead for U.S. banks in the second half of the year in 2022? So U.S. banks may be slowly turning a corner in the second half of the year after a nervous first 6 months of 2025. Despite fears that tariffs could slow economic activity, banks remain cautiously optimistic about a pickup in sluggish loan growth. More borrowers are behind on loan payments, but that number is not alarming yet and is similar to pre-pandemic levels, experts say, and banks have built large capital reserves to protect themselves from losses if the economy falters. So very interesting there. We shall see. So banks are cautiously optimistic on loan growth into the second half of the year. Bank borrowers, again, not really doing too bad, but there are some spots of concern in terms of, commercial real estate loans, particularly the office sector. And then what happens if the economy goes south? Banks are still, in a very good capital position, have very good liquidity and reserves. So, again, you're not going to see a major catastrophe if we should go into a recession or if the economy should slump a little bit. And then very quickly, a couple of interesting stories here. So Planet Hollywood sues Florida Bank and alleged PPP fraud. So United Bank forced Planet Hollywood and its affiliate companies to reapply for a PPP loan, which they lost the opportunity to have at least $4.5 million forgiven. So kind of an interesting story. All right, come on here. Where's my thing here? Okay. NCAU closes 2 credit unions in 2 days. So the regulator closed Aldersgate Federal Credit Union and Butler Heritage FCU. Aldersgate was placed in conservatorship last month after operating in an unsafe and unsound manner. So, which is kind of interesting because so they closed 2 credit unions rather quickly, and I think they've closed 7 this year. So yeah, I mean, you've got some credit union, a little bit of issue there in the credit union world, a little bit of an issue there. All right, come on here. Let's see here. Community banks view embedded finance as the key to longevity, report says. So despite increased regulatory scrutiny of banking as a service, over half of the surveyed community bank respondents are considering implementing BaaS or embedded banking solutions. So nearly all community banking leaders see the integration of embedded finance as crucial to long-term survival of their institutions. A new report published Tuesday revealed 60% of respondents deemed embedded finance as extremely important, according to the report from banking as a service platform Treasury Prime, which highlighted how community banks are thinking about embedded finance. For these banks, embedded finance enables the creation of new revenue streams, acquisition of low-cost deposits, and enhancements of the consumer experience by partnering with fintech companies, according to the report. I would put a big but in there. Yeah, I don't think a lot of banks that were just involved with the Synapse financial bankruptcy and failure. I don't think you're seeing a lot of banks running out there to do the BaaS model right now. That could shift again, but I don't think that's right now. And I think that you have to look at who put this report out. The fact that this was put out by Treasury Prime, a banking as a service platform, kind of a little bit biased, kind of have a vested interest in putting out that idea that, oh my gosh, every community bank out there, if you're not doing embedded finance, you're in real trouble. And again, embedded finance is important to the future. It kind of plays into a whole digital strategy, and I will talk more about embedded finance in the future and future episodes and stuff like that. But this idea that if you're not doing embedded finance, that's it. The world's going to end. I don't really know about all that. So, all right. Well, I am going to stop with that one, and I'm going to go into wrap-up mode here. So let's go to our story of the week and our quote of the week. So so our story of the week here, we're going to do the London Metals Exchange, otherwise known as LME. So the London Metal Exchange is a commodities exchange that deals in metals futures and options. It is the largest exchange for options and futures contracts for base metals, which include aluminum, zinc, lead, copper, and nickel. The exchange also facilitates trading of precious metals like gold and silver. The LME is located in London, England, but has been owned by the Hong Kong Exchanges and Clearing since 2012. The prices discovered on the LME are considered the standard gold prices for base metals. So other major metal exchanges include the Shanghai Exchange and the New York Federal Reserve Bank in New York City. So the London Metal Exchange, or the LME, is the largest metal exchange in the world. You also have the London Gold Exchange, which is part of that. The New York COMEX Exchange is the second largest metal exchange in the world, followed by the Shanghai Gold Exchange as the third largest metal exchange in the world. So there you have London Metals Exchange. I will definitely talk more about the London Metals Exchange in future episodes as I do more explanation on kind of the gold market and, gold commodities and how that all works around the world, because it is, I do think it's rather fascinating. And then finally, let's get into our quote of the week. So I have a good one here for you guys today. So this is from a book called The Velveteen Rabbit, and this is deep. This is deep. Get ready for this one. Okay. So you become. It takes a long time. That's why it doesn't happen often to people who break easily or have sharp edges or who have to be carefully kept. Generally, by the time you are real, most of your hair has been loved off and your eyes drop out and you get loose in your joints and you become very shabby. But these things don't matter at all, because once you are real, you can't be ugly, except to people who don't understand. Now, I want people to think about that one a little bit. I know that one's a little long, but it's deep. It's very, very true. It's very true. It's absolutely true. I think that, in other words, it's all about growing old gracefully, and how hopefully over the course of your life, if you achieve true wisdom and understanding, you become real as you get older and head toward the end of your life. And once you become real, okay, no one will ever, people won't see you as old or, shabby or whatever, because you're real. And the only people that'll see you as ugly or old are people that just don't understand you or don't get it. So it's like I said, it's a little deeper one there this week. But anyway, I thank everybody for hanging out with me tonight. I thank everybody for watching. I hope everybody had a good time. Just a couple of notes real quick. So I am looking for some reviews. I need some reviews on Apple Podcasts and Spotify. So if you're listening to this on either of those platforms, please leave me a review. I could really use the reviews out there, especially on Spotify. I've got a lot of Spotify listeners out there. So please, Apple Podcasts or Spotify, please leave me some reviews. If you do not follow me on YouTube, and I don't know why I've never talked about this before, but on YouTube, I am actually able to put out a lot of posts. So I talk about, I put out posts every Sunday. I list out what are the episodes coming out this week. I also, if there's things going on, if I'm changing the time of the weekly live stream for whatever reason, or if I'm not having a live stream that week for a reason, I always put those posts on YouTube. So if you follow me on YouTube, you'll be able to get all of that more current, up to the date information as to just, what's going on with the podcast, things that I'm working or things that I'm doing, stuff like that. So if you want those notifications, definitely follow me on YouTube. And then finally, I did an interview 2 weeks ago. I did a massive interview with Dr. Thomas Honig, who was the focus of the book, The Lords of Easy Money. If you have not seen that interview, it has gotten a massive response. Probably the highest viewed interview I've ever had. People absolutely loving it, getting tremendous positive feedback from it. So if you have not had a chance to check out that interview, please go watch that. And if you haven't checked out the Lords of Easy Money series, please go check that out. I think just understanding that will just completely change your whole view on the economy and the Federal Reserve, for that matter. So, all right, with that being said, I thank everybody again for coming and hanging out with me tonight. Remember, if you like what you're seeing, please make sure to like, share, and subscribe, as that really helps the channel. Remember to please leave your comments down below, as I love getting back to everybody. Remember, we are on YouTube, Rumble, and all major podcast platforms, and please be sure to go check out some of the other content on the channel. With that being said, I hope everyone has a great weekend. I will be back next week, same time, same bat channel, 8 o'clock Saturday night. Look forward to seeing you all then. Until then, make sure to check out all the episodes during the week, Monday through Friday, every day at noon. New episode releases. And with that, have a great weekend. I'll see everybody again real soon. Thank you for listening. Take care.